Chief Executive Officer of MTN, Ralph Mopita, who has provided further details on the telco giant's first half 2025 earnings. Speaking at an investors briefing, Mopita explained the facts behind the turnaround results, that should double-digit growth in headline earnings as currency pressure eases in Nigeria, one of MTN's key markets on the African continent. Let's take a listen to those Q&A session.
The guidance, I'll give it another go at this. So at the service revenue, we said that we're just widening the lower end of the range to reflect realistically where we are today. We're 2.3. But as we compete, for sure we're pushing towards. And on the margin side, what we're basically saying is that we're going to put a bit more investment into kind of on the distribution end. So for example, and we've already done that, we've changed ongoing commission, the so-called OGR. Our OGR levels are lower than Vodacom and Telkom, okay? So we said to Charles, please go ahead, just look at OGR. In terms of the distribution, you all understand how the distribution structures work in South Africa. So we're the lowest OGR. So if somebody else is offering you a higher OGR as you're a dealer, and MTN is number 3, that can't keep us competitive, even though we're trying to protect margins. So we're pushing, we're investing a bit more at the dealer and at the distribution end in South Africa. I think you'll start to see that come through. So the lower end of the range is saying we are showing reality. Because if I said to you, Louise, we're doing 4 to 6, I haven't showed that today, have I? Okay, so let's just lower that range, but the top remains. So let us see how these costs of sales investments, improve our market shares, yes or no. So we're still aspiring for healthy market share. We still aspire for 30 to 35% of all net additions in the market. That aspiration has not changed. We're just wanting to be realistic around the competitive dynamics that we're seeing. So there's a lot of work around, let's say, distribution, around devices. The device strategy is quite granular. We have device partners who are bringing devices and attaching the SIM, and we don't have the costs of that, but we're also investing in devices. So our aspirations remain around maintaining or actually growing market share, or other than not the other way around, to be clear. I think the other point, and you must remind me because you had 4 questions. Network as a service, my discussion with Charles, and this discussion will now move from Charles to Ferdy and Yolanda, is I think we have to think about the dynamics of an SA market in terms of MVNOs. South Africa right now, if you think about it strategically and just step back, there are 2 fully invested networks in MTN and Vodacom, 2 fully invested networks, okay? High quality and all of that. Telkom, with respect, have portion of their network, and then they roam a little bit on us and on Vodacom, okay? And then you have these MVNOs are coming on, the banks, etc. So I'm not disappointed that we're missing that target, because actually, if we don't think about it strategically long term, you're putting all this capex and you're having all these MVNOs a bit like OTTs. They don't put the capex in, but they can go and give you much cheaper data than you yourself, the generator of that data, who's got the cost of production, can. So I'm very happy to miss that, because ultimately you could find yourself where Europe found itself. Go and look at the Netherlands, okay? You look at the Netherlands, 10, 15 years ago, the MVNOs wrecked the market on retail pricing. So Charles missing that, that's okay. You can mark me as red, but strategically, if we're not thinking about, so we will go and look for the retail business, but we have a walkaway point where the pricing does not have sufficient headroom at the cost of production. We say, hey, Charles, just leave it, okay? We're not going to, that strategically, you need to understand that's how we're thinking about it. Because if you're not careful, you'll have a Netherlands effect. Jens, our former colleague, saw that happen live when he was in Vodafone Europe. So let me finish on the FWA. Look, we'll push on the FWA. We have spectrum, as long as we have sufficient spectrum, and we can, get the quality almost fiber-like. to a home, we'll do that. We're looking at the outdoor units, how they can help us with spectral efficiency. That will invest to the extent that, unlike Nigeria, where they have 100 megahertz of 3500 spectrum, we don't have as much. But between the 2600 and 35, we'll make a plan. And then FTTH. I mean, FTTH, in our view, and we've been consistent, so we won't make it up, that FTTH, medium to long term, there must be some sort of consolidation opportunity that will come in one way or the other. We're not going to be allocating capital. We're going to have a fiber overbuild in this country before you know it. So, I mean, that's kind of our position. But FWA, and you saw, Charles and team have really pushed. Home was one of our highlights for the period. So we'll continue to invest in that way.
Yeah, so just in the interest of efficiency, there are a couple of questions that were covered by Louise's question, but just to dovetail on that, and maybe a question for Tsulu, do you expect capex to sales, this is South Africa, to decrease significantly in the midterm given the guidance that was provided? And then back to Ralph, the second question, how do you think about pricing in South Africa in terms of your medium-term guidance outlook? So just on capex to sales.
I think the capex is 12.6% now. We will obviously review relative to the revised guidance. What is the acceptable range? It will definitely be below the 15 to 18% that we guided at group. We think obviously it will be below that initially, but we'll obviously go through the business planning process now and just firm up the numbers, and we'll communicate later on in the year.
Yeah, I think on the pricing side in SA, you've got to think about it prepaid, postpaid. Postpaid, the pricing regime has been quite clear. There's annual, and the market's quite comfortable with that. It looks more like developed markets kind of pricing. And on the prepaid side, I think, we took a step which we believe is the right, medium to long-term one, is that even on the prepaid side, you have to price up to reflect the inflationary costs, as you see prepaid pricing up in other markets. So we'll still continue. I mean, pricing in the prepaid is obviously, quite granular. My town offers, all of those kind of things. So you can't have a general statement on it. But I think the direction of travel over the medium term is you do need to pass some of the inflation onto the customers, because obviously there's a big capex that needs to be financed there. The framework has been clear. At a group level, we see 18 to 15. So the direction of travel is down towards 15 over the medium term is what you need to think about. I mean, I guess there's a combination of factors that are market specific, so you can't make a general statement. In a market like Nigeria's example, lots of spectrum. They've got a good spectrum estate, but we're also pushing FTTH in Nigeria.